Most people encounter the idea of abundance through slogans. Think positive. Visualize success. Believe there is enough for everyone. In serious wealth-building books, however, abundance is not presented as optimism or wishful thinking. It is presented as a philosophy of how value is created, multiplied, and shared over time. And this distinction matters because abundance without structure quickly collapses into fantasy. Books that genuinely inspire wealth creation often begin by challenging a deeply ingrained scarcity mindset. Scarcity is not simply a lack of money. It is a belief system shaped by repeated exposure to limitation, competition, and fear of loss. Scarcity teaches people to protect, hoard, and defend. Abundance, as these books describe it, teaches people to build, expand, and collaborate. But abundance is not denial of risk. It is a different response to it. One of the earliest insights across abundance-focused books is that wealth is not a fixed pie. This idea sounds obvious intellectually, yet emotionally it is difficult to internalize. Many people operate as if someone else's success reduces their own chances. Abundance philosophy reframes this completely. Value is not merely redistributed. It is created through innovation, cooperation, and leverage. Wealth creation then becomes less about winning and more about designing systems where value can grow. These books often trace abundance back to mindset, but not in the superficial sense. They emphasize orientation. Scarcity asks, "What might I lose?" Abundance asks, "What can I build?" This shift changes behavior. People with an abundance orientation invest more in skills, relationships, and long-term thinking. They tolerate delayed gratification because they expect expansion rather than depletion. Another recurring theme is responsibility. Abundance does not remove accountability. It increases it. When you believe opportunity is expandable, excuses lose power. Books make this clear by showing that abundance thinkers take ownership of outcomes instead of attributing everything to external constraints. This does not deny inequality or hardship. It reframes agency within imperfect systems. Abundance-focused books also emphasize value creation before value capture. Scarcity-driven behavior seeks extraction, get as much as possible from each interaction. Abundance-driven behavior seeks contribution. Create something useful, then allow returns to follow. Financial celebrities often describe this as a turning point, when they stopped chasing money directly and focused on building value money, followed indirectly and more sustainably. Another insight appears repeatedly. Abundance thrives in collaboration. Scarcity isolates. Abundance connects. Books highlight how wealth creators build networks, partnerships, and platforms that allow others to benefit alongside them. This does not dilute wealth, it amplifies it. The most enduring fortunes were rarely built alone. They were built through ecosystems that aligned incentives. Abundance philosophy also reshapes how risk is perceived. Scarcity treats risk as something to avoid. Abundance treats risk as something to manage in pursuit of growth. This does not mean recklessness. It means understanding downside clearly while remaining open to upside. Books stress that abundance thinkers prepare for loss, but do not let fear of loss paralyze action. Another important theme is time horizon. Scarcity compresses time. Everything feels urgent. Abundance expands time. Decisions are evaluated over years rather than weeks. Wealth creation books consistently show that long-term thinking is not a luxury, it is a prerequisite for compounding. Abundance thinkers delay consumption, reinvest gains, and allow systems to mature. These books also confront the misconception that abundance means unlimited consumption. In reality, abundance philosophy often leads to restraint. When people feel secure in their ability to create value, they feel less pressure to prove success through spending. Wealth becomes quieter. Confidence becomes internal. Financial celebrities often describe how abundance shifted their focus from display to durability. Another subtle but powerful insight is that abundance changes how people relate to money emotionally. Money becomes a tool rather than a source of identity. Scarcity ties self-worth to financial outcomes. Abundance separates them. This separation improves decision-making. When ego is no longer attached to every dollar, choices become calmer and more rational. Abundance-focused books also emphasize learning as a renewable resource. Skills compound. Knowledge compounds. Curiosity expands opportunity. Scarcity treats learning as optional or risky. Abundance treats it as insurance. Wealth creators invested continuously in understanding markets, people and themselves, not because they feared falling behind, but because they expected growth. Another recurring lesson is generosity with boundaries. Abundance does not mean giving indiscriminately. It means giving strategically, in ways that strengthen systems rather than enable dependency. Books show how thoughtful generosity builds goodwill, trust, and opportunity loops that return value in unexpected ways over time. Importantly, serious abundance literature avoids magical thinking. It acknowledges structural barriers, randomness, and failure. Abundance is not the belief that everything works out. It is the belief that even when things fail, learning and rebuilding remain possible. This resilience mindset is central to wealth creation. As readers progress through these books, they notice a tonal shift. Anxiety fades. Comparison loses urgency. Wealth becomes less about outpacing others and more about aligning life with personal values. Financial celebrities often say that abundance did not make them richer overnight, but it made their pursuit of wealth more coherent and sustainable. Abundance philosophy also reframes success metrics. Instead of focusing solely on net worth, these books highlight optionality, freedom of time, and capacity to choose. Wealth is valuable not because of what it displays, but because of what it allows. This reframing reduces desperation and improves patience. Over time, abundance stops being a belief and becomes a behavior pattern. People invest differently. They negotiate differently. They collaborate differently. They respond to setbacks differently. Wealth creation becomes a byproduct rather than an obsession, and this is where the story begins to narrow. Because once abundance is understood not as positive thinking, but as a disciplined philosophy of value creation, the way people approach money, work, and opportunity changes fundamentally. Fear loosens its grip. Long-term thinking replaces urgency, and wealth stops feeling like something to be chased and starts feeling like something to be built steadily through contribution patience and systems designed to grow rather than merely protect, like learning to cultivate soil instead of chasing harvests, and discovering that abundance, when taken seriously, is less a feeling and more a discipline practiced daily. In the second half of this philosophy, the books that truly inspire wealth creation become strikingly clear about a truth many readers resist. Abundance does not eliminate effort or failure. It changes how effort is allocated and how failure is interpreted. Scarcity reacts to failure as proof of limitation. Abundance treats failure as information. This single reframing alters behavior at scale. People try again with adjustments, instead of retreating with excuses. Abundance. As these books describe it, is operational. It shows up in how people allocate time, capital, and attention. Time is invested in skills that compound, rather than tasks that exhaust. Capital is deployed with a margin of safety, rather than desperation. Attention is protected from noise, so that long-term signals can be recognized. None of this is glamorous. All of it is decisive. Another hard lesson appears repeatedly. Abundance does not mean saying yes to everything. It means saying no with confidence. Scarcity overcommits because it fears missing out. Abundance selects because it trusts future opportunity. Wealth creators influenced by this philosophy learned to protect focus fiercely. They chose fewer projects, deeper partnerships, and longer horizons. The result was not slower progress, but cleaner compounding. These books also dismantle the idea that abundance is purely individual. Wealth creation accelerates when systems are designed, so others can win alongside you. Platforms, partnerships, and incentives matter. Abundance thinkers ask how value can scale without their constant presence. Scarcity thinkers cling to control. The former builds leverage. The latter builds burnout. Risk is treated with precision rather than bravado. Abundance does not deny downside. It prices it. Books emphasize asymmetric bets situations, where downside is limited and upside remains open. This approach turns courage into calculation. Over time, a series of small survivable risks outperforms occasional bold gambles fueled by optimism alone. Another transformation occurs emotionally. Abundance reduces comparison. When people believe value can be created repeatedly, they stop measuring themselves against others' timelines. Envy loses urgency. Collaboration becomes easier. Decision-making improves because it is no longer rushed by fear of being left behind. Financial celebrities often note that this calm, not confidence, was the greatest upgrade abundance gave them. Importantly, abundance also clarifies ethics. When you believe the pie can grow, deception becomes unnecessary. Transparency becomes rational. Long-term trust becomes more valuable than short-term advantage. Books show that reputations built under abundance last longer because they are not dependent on extracting value faster than it can be replenished. As readers internalize this philosophy, they stop looking for motivation and start building structure. Automatic investing, skill roadmaps, relationship stewardship. These systems make progress boring and durable. Abundance becomes less about mood and more about method. And then comes the quiet payoff. Wealth creation under abundance feels less like a sprint and more like stewardship. There are fewer dramatic highs, fewer catastrophic lows. Progress accumulates in the background. Optionality increases. The future feels wider, not because guarantees exist, but because capability has grown. So the lesson resolves without spectacle. The philosophy of abundance does not promise riches to those who believe hardest. It rewards those who build value, patiently, collaborate intelligently, manage risk honestly, and commit to systems that can outlast emotion. When practiced this way, abundance stops being a slogan and becomes a lifelong operating system for creating wealth that endures. If this reflection resonated with you, pause and notice what changed as you read. Did urgency soften? Did the idea of building systems feel heavier or relieving? Share what stayed with you. And if you want to continue exploring books that replace hype with frameworks and fantasy with durable progress, subscribe and stay connected. Because wealth built on abundance is not loud, but it lasts.